Hey guys, welcome to Little Panda Forex. I think this is the most important and valuable video on this entire channel. I'm going to show you how you can turn $100 into $10,000 trading Forex in 2023. I'm going to show you step by step the trading plan, the risk management, the setups that you need, and yeah. We're gonna start with $100 because that's the most affordable amount to most of my viewers. I'm gonna start with a different amount. I'm gonna show you everything, and yeah, let's get started. So the trading plan, very important part of this journey if you're gonna do it. The first thing you need to do is make sure you're using money that belongs to you, and by this I mean that it's not money from a prop firm like FTMO or My Forex Fund. It's your own money, because we don't want to have any deadline or any sort of restrictions. So make sure you're using your own personal money, and it has to be money that you can afford to lose. Point number one, only take 1 to 10 risk to reward ratio trades only. And these are what I call quality setups. Later in the video, I'm going to show you what I mean by this, okay? Point number two, if you have one loss, you need to stop trading for that entire week. Point number three, there's no partials while we're doing this challenge. So you can't close a bit of your trade at certain areas, okay? Point number four, we're only going to move our stop loss to break even after a key level has been broken, and not before that. All of this thing that I'm just telling you now, I'm going to show you on the chart, and that is the trading plan. Now we come to the next bit, which is the risk management. Point number one, in risk management, you can start with whatever capital you can afford. Minimum I would recommend $100. Anything below that, it's no, there's no point, okay? Point number two, risk 25% of the capital per trade, and only go after once you've made 10 times your return. So if you're risking, let's say $1, you have to get out when you make $10. That's 10 times your investment, nothing before, okay? Compound your account using the profits only. Only the first trade that you're gonna take on your account is very risky because you're playing with your capital. After that, everything, you're playing with profits and your capital is protected as long as you're following this risk management plan. Keep going until you have reached your target. We're all gonna have different targets depending on how much money you want to make. Now, I've shown you the trading plan and I have shown you the risk management plan. Now I'm gonna show you my one, okay? So here's my plan. Everyone's gonna have a different plan. Just for transparency purposes, I'm gonna show you my plan. So I'm gonna be starting my balance with $2,000. I'm going to be risking $500, which is 25% of the capital, and I'm going to aim to make $5,000. So I'm risking $500 to make $5,000. That's 10 times my investment, okay? And that's going to be the very first trade, which is going to be the most risky trade out of all of them. And once I've made $5,000 using this one trade, okay, I'm going to risk $5,000 to make $50,000, 10 times my investment. This is where it gets a bit tricky. I'm going to be risking $10,000, not the $50,000. I'm going to risk $10,000 to make $100,000. Why am I not risking $50,000 and only $10,000? Because I want to have that $40,000 just there safe, and you know, there's no need to risk that much. And once I have turned my $10,000 profit into $100,000 profit, I have reached my target. At this point, I'm going to withdraw 80% of everything, and the rest that I have, I'm just gonna go and play around with it. Now you've seen everything, I'm going to show you what I mean by A-star setups. So here is GBP USD 4 hours. This is a A-star setup. Why? Because we had a 4-hour order block. The price broke structure to the upside. It came back down to the order block, mitigated, and then it moved up and breaking structure here. Now, once price is accumulating, so it's moving up, we expect some sort of correction. So price slows down a bit to breathe, and then we're gonna look to go long with the overall trend. The trend is your friend, guys, okay? So this is GU, the 1 hour. So what we have here is we have Asian lows. If we go to the 15-minute time frame, price hasn't taken the Asian low. Now Asian low has been taken, but I'm waiting for some sort of bullish momentum to kick in, okay? Okay, all looking good. Yep, let's see. So now what happened, price took this low and I'm expecting price to close back bullish in order for me to go long with the overall trend. This is a very good bullish momentum. Now what do I do in this case? In this case, I will go to a smaller time frame and look for some sort of order block or imbalance to enter from. I'm going to go to the 10 minutes. Okay, you can see there's an order block sitting here, so you make your entry at this order block. Okay, and what are you going to target? We're going to target liquidity. Go back to the 1 hour. What can we see? Looking left, we can see all of this trend line liquidity. All of this is trend line liquidity that some of it has been already taken, and I'm going to target this area. Why? Because this is the Asian high from a while ago. So like that. Okay, now going back to the 10 minutes, I'm expecting price to come back to mitigate this order block, and my target is the Asian high, and I've adjusted my stop loss accordingly to make 10 times. Okay, now price comes, triggers you and starts going your way. Now we broke above a key level. At this point you can move your stop loss to break even and wait for your full target at 10R. Okay, we play it, price starts doing some correction and full target was hit. Why is this a star setup? Because we started our analysis on the 4 hours, then we waited for 1 hour, and then we waited liquidity to be taken, then we waited for the break of structure, then we waited for order block to be mitigated, and then we targeted the Asian high, which is the most likely zone. After it broke this area, you move your stop loss to break even. This is one example. Another one is from recently, which is GBP JPY. This is GBP JPY. What do we have? We have an order block, price broke above it, having a break of structure, come back down, mitigate, and it bounced. Now what would you do? You go to the 1 hour, and whilst price is doing this, you do nothing. You just mark this area. Why? Because this is an area where price made the low, and even with the news that came out today, price failed to break this low. Therefore it is a likely zone to hold. Now we're gonna jump on to the 5-minute time frame. What we can see here is some relative lows. We're expecting the price to take that low like it did, closing very strongly, getting the sellers in, and then it went back, manipulating, and it closed above that. Now if you play it, all of this, we do nothing. We've been given a signal here, but we need to break structure and have some sort of order block. So structure was broken here, but there's no place for us to enter from, so we just wait. It has to be an A-star setup. All of this, we do nothing. This is noise. Okay, there we have it. Price went up all the way till here and left behind this order block. So you would enter somewhere at the order block. Where would you target? Well, let's go back to the 1 hour. We can see we have these wicks here, relative highs, and just above it the Asian high. So you would put your entry, your buy limit near the order block, bear in mind spreads, so a bit above it. Adjust your stop loss so you get a 1 to 10 RR, something like this. Okay, and we are expecting price to tap us in and fly. It has no other reason to play around. Liquidity has been taken, it came to the 4 hour order block, it's been mitigated, we had the break of structure, everything looks good. Trade came into play, played around, and again look at this candle, it's showing you a lot of momentum. And then now price broke above this area, move your stop loss to break even, and let's go to the 1 hour and see what's gonna happen. And just like that, you made your 10R. This is A-star setups. If you get it once a month or once a week, just wait for it. You have to be patient, because this is not a challenge that you're doing for a prop fund. It's your own money. Wait for that perfect setup, because you are risking 25%, which is a lot. So if you're waiting for that perfect setup, things are gonna go your way. Even if it doesn't, you lose one trade, stop trading for that week, and then go ahead the next week. And these are the kind of setups you need to look for, and these setups do happen in the market at least once a month, at least. Usually I can see setups like this maybe once a week. So find a pair that you think is good, or use a series of trading pairs and do it. So yeah, I will see you guys very soon, and I will update you guys how my journey is going. You guys should do it as well. Good luck to all of us, and let's make 100 times.